True. Ajay Argal is with us, Senior Vice President and Portfolio Manager, Emerging Markets, Equity, India at Franklin Templeton. Ajay, good morning. Good to have you with us here. Prashant, this side. It seems to be a clear marked shift. Determined FPIs wanting to come in and come in quickly, lifting all boats here. That is on one side. And the other side, you've got earnings for the fourth quarter, which were not expected to be great, and they're not great so far what we've seen. I think that's at least what I've observed. So just that dynamic which is playing out, Ajay, how do you look at it and how far more to run?
Yeah, so this is typically the way the foreign investors work because they have been, as we are aware, selling India for a long time. It is just that right now the confusion which is there in the global markets with respect to the tariffs and the implications thereof on the various economies and the stock markets is just that some of the foreign investors think that India has kind of underperformed slightly during the first few months of this year. So it was kind of a trade for them because they continuously need to get in and get out of the various markets, just like we kind of try to do the same with the stocks. So it's part of their daily job in terms of trying to identify some short-term opportunities as well. So I would think that they are approaching it this way, and everyone is looking for more direction and more clarity as to what is happening on the tariffs front. And till then, right now, maybe they were spotting some opportunities.
What's your assessment of earnings so far, Ajay?
Yeah, as you rightly mentioned, the earnings are expected to be muted, and they are in line with that. So generally, the expectations have been kind of met, and the expectations itself was very low. So it's kind of mid-single digits. So two of the largest sectors, a lot of earnings have come out, which is financials and IT. So financials, generally, the earnings have been in line and slightly better in some cases. Whereas IT, as we all know, the earnings expectation was very low and it was kind of met. But more importantly, the commentary was slightly more muted than expected. So in that sense, there is no positive surprise from the major earnings which have been declared so far.
Okay. Ajay, hi. Good to have you on the show today.
Good morning, Surabhi.
Good morning. Good morning. So the sense is, how to sort of play things from here on. And first of all, give us the sense on whether you expect the market to get back into its winning ways, or do you expect more consolidation? Because the recovery from the lows in April has been quite dramatic. It's been, I think, better than what most bulls would have forecast. So are you expecting a very momentum-driven market again? Or do you expect more consolidation in which maybe, just going back to quality, going back to value might be a good approach?
Yeah, I would be in the latter camp because there is a lot of, let's say, confusion in terms of what the global situation is. So we are aware of the tariffs, and I guess you were talking at the beginning of the show how some of them is getting reversed. So every day the dynamic is changing, and even the companies are finding it very difficult to make any plans. So all the capex plans are on hold. It's a bit difficult for companies themselves to assess, and so therefore for the investors it is even more difficult. So generally the investors are more in a reactionary mode. On top of that, of course, as far as India is concerned, now we have this India-Pakistan situation. So I don't think the market is right now discounting any of the repercussions out of that. And obviously, no one knows what's going to happen in the future. But the point is that the markets don't like uncertainty. And we are also aware of the slowdown in the global growth and the growth in India. All the estimates in India GDP growth also have been cut to the extent of 30, 40, 50 basis points. We are now closer to maybe 6.2, 6.3%. Which also might be difficult to achieve. The earnings growth also have been downward revised. So till some time back, we had kind of 15% for FY26. Now maybe the analysts are estimating more in the range of 12 to 13%. So there is a bit of caution in the air all across because the clarity is not there in terms of the immediate future. though the attractiveness of India continues in terms of the relative growth being higher. So that story does not change. And that is why, as you were asking some time back in terms of the foreign investor interest, every now and then the interest will be there. And the foreigners will also be looking at the trading opportunities. So it will be a very kind of a consolidation market. I don't think it will be a very momentum, secular, one-way kind of market.
Okay, all right. Hi, Ajay. Good morning and good to see you, Ben. Ajay, the markets are appearing to get their mojo back. And if this sort of buoyancy continues, then maybe those stock market players that had seen a big pullback, barring a BSE, of course, they could return back into play. What's your take on them? Your BSE that's made a fresh all-time high. Valuation-wise, you can argue that it's got too expensive. I think yesterday they've introduced the block deal window with T+0 settlement. So that could be one factor that's playing out. But otherwise, as a space, that got a lot of attention. Then it got slammed. And some of the stocks are making a comeback. How do you play it?
Yeah, so we are generally a bit cautious on the capital market related plays. We had played it earlier till last year. And of course, last year the markets did very well, and all the stocks related to that, they being derivatives, their business being derivatives of the markets doing well, they had done well. So in some of our funds where we had positions there, we had booked some of the profits. So right now we are approaching it cautiously because, as I said, we believe that the markets will be in a consolidation phase. It will not be a very secular kind of market, which really helps the capital marketplace. So it is better. The better opportunities are available in terms of relative growth in the other sectors.
Okay. Ajay, then let's ask you what you would definitely avoid in a market, given the uncertainties that you described. And earnings are obviously a big risk. What are you strictly staying away from?
So there isn't a particular sector which is looking like very bad because most of the sectors, it's not as if any particular sector, the valuations are very attractive, and some sectors, the valuations are very high. So there is a bit of correction within the valuation. So as we have been talking for some time, and I was here on the show as well talking about how we used to like financials. We still like the financials, but now the valuations are better. So if you look in terms of avoiding sectors, we haven't avoided any sectors as such, but we are underweight a few. So IT is one sector, at least in the focus fund, we are underweight. We have been underweight with the same assessment that the earnings growth and the business growth, especially in the US corporate sector and the big banks there, which are the big clients for the Indian IT, they will have an issue with this kind of confusion and talks of US recession, and therefore the IT expenditure, the growth may be muted. So we have been underweight, and though the stocks have corrected quite significantly, we still feel that it's better to remain underweight till things improve on the business front. Consumer staples is another sector where we have been underweight due to the tepid growth and the valuations not being corrected anything significantly. So that is another sector where we remain underweight.
No, got that. Ajay, by the way, defense stocks are doing well. The shipbuilders are looking up. Mazgaon is up 3%. And I saw Garden Reach as well, which was up some 3-4%. There is Paras Defense, which is higher, Data Patterns, and a few others as well. So that's one pack which seems to be coming up. Bandhan Bank is up 4%, 171. It was not there in the mix when we started in the morning. We looked at stocks in the first 5 minutes or so of trade. And more names are sort of course, being joining the list. Premier Explosives, I think, right? I mean, the 7-8% pop coming through on that one at this point in time. Ajay, thank you very much for joining us. Good speaking with you, and we'll speak again soon. Thanks indeed.